Hey everybody, Smart Silver Stacker here. Hope you're doing well. Welcome to this Monday live stream. We're going to talk about the price of silver and the price of gold and how in the short term here it's looking like they may come under some significant pressure. We're going to be talking about the factors that could be weighing on the price of gold and silver here in the short term. And I do want to say before we get started with this live stream, first of all, the long-term outlook for both precious metals, I think, is still incredibly sound, incredibly bullish. The fundamentals are still very good, but again, in the short term, there are some risks here that we stackers may want to be aware of. So you can see already from the chart of silver here that the price is coming under some pressure, down just under 2% after the market opened. But it's not just silver. Just about everything is coming under pressure. As you can see, the price of gold is down. All the major stock indexes, crude oil, everything falling today. So what is driving this? Well, there's a couple of factors. First of all, if you want to buy into the drop that we're seeing in silver, make sure you check out SD Bullion. They got a spot deal right now for everybody on Silver Britannias. You can get one at spot and add that to any order. So make sure you check that out. But the price of silver may be coming down even a bit more. The first thing that is weighing on the price of gold and silver today and on markets in general, and may continue to weigh on them, at least here in the short term, is a hawkish Federal Reserve chairman. We've got Jerome Powell in a 60 Minutes interview over the weekend telling us that he's wary of cutting rates too soon. And also, I want to talk about this, but I also want to get a quick feel from the audience here. How's the audio? I've had a few people tell me that the audio was too quiet on previous live streams, so I've adjusted some settings here, trying to make sure I'm coming through loud and clear. I'll put a 1 if you can hear me okay. Put a 2 if it's still a little quiet, or just let me know what you think in the chat. All right, so Powell here telling us on 60 Minutes that Americans may have to wait beyond March for the central bank to cut interest rates as officials look for more economic data to confirm that inflation is headed down to 2%. Now, this is why we are seeing the dollar, or I'm sorry, this is why we are seeing markets come under pressure. They had already basically priced in rate cuts in March following December's FOMC, where Powell kind of just basically told us that that was the case. And now he tells us the danger of moving too soon is that the job's not quite done, and that the really good readings we've had for the last 6 months somehow turn out not to be a true indicator of where inflation is heading. He also said, we don't think that's the case, but the prudent thing to do is to just give it some time and see that the data continue to confirm that inflation is moving down to 2% in a sustainable way. Now, I mean, the first thing that you can see here from the market reaction to these comments is that the only thing driving the rally that we've seen in stocks is the anticipation of more easy money. Now, the Fed also basically told us now that they're not going to be hiking anymore. I mean, in their last FOMC, they removed language that indicated that more hikes might be coming. So there's no more hikes. But what Powell's telling us is that we might just have to wait a little bit longer for cuts. And yet that is still putting a lot of pressure on these markets. And it makes sense because they have priced in more easy money coming. The other thing that's going on, and I see a few people talking about this in the chat saying, why would bombing another country make the dollar stronger? Well, that is what happened over the weekend. The U.S. Finally launched its much-awaited retaliation for the drone strike on the U.S. base that killed 3 U.S. service personnel, launching strikes in Iraq, killing nearly 40 people, launching attacks on more than 85 targets linked to Iran's Revolutionary Guard and the militia it backs. Now, what was interesting, I thought the timing of this, they waited until markets closed on Friday to begin launching these strikes. And if you're wondering why striking targets in the Middle East would strengthen the U.S. dollar, well, it all has to do with the petrodollar. I mean, it's probably what this conflict is really all about in the first place. It's why we have military bases all over the Middle East. Has to do with defending the petrodollar system. The BRICS nations, now Iran, potentially Saudi Arabia, and other Middle Eastern nations joining the BRICS, they've been talking a lot about ditching the U.S. dollar. Well, Now I think we're sending a message that the U.S. is not going to tolerate that. We've also got British forces, UK with their coalition forces, launching an additional round of strikes against 36 Houthi targets across 13 locations in Yemen. So the bombing continues, the strikes continues, and this is all, again, about the petrodollar. And I mean, you can just look, the proof is in the pudding here. We've got the Market Watch US dollar index chart here. Look at the 5-day chart. You can see that on Friday we saw a pretty big tick up in the US dollar, and this correlates to lower prices for gold and silver. Remember, when you see gold and silver heading up, a lot of times it just has to do with the dollar weakening. Well, to the extent that the U.S. has now shown that they will defend U.S. hegemony in the Middle East and around the world, and use the military, the enforcement arm of the Federal Reserve, basically, to defend the dollar's status as the world reserve currency. And I think that markets are paying attention to this. You've got the UAE, for example. They were selling oil to India in rupees. You've got natural gas contracts via Total Energy, Beijing paying for gas in yuan from the UAE last year. There's been a lot of little, death by a thousand cuts kind of moves away from the petrodollar, and I think that this has a lot to do with this conflict. So you can expect, at least in the short term, potentially the dollar to rally as we get this hawkish sentiment from the Federal Reserve, and the U.S. showing that it's willing to back up the petrodollar system with force. Now, the FedWatch tool here from the CME, basically the nail is in the coffin for March rate cuts. Now, still a lot can happen between this March 20th FOMC meeting and now. So, potentially we could still see rate cuts, although right now markets are only pricing in a 14.5% chance of cuts. But again, the long-term story here, we're still going to get cuts. The May anticipation, that's still, what we're looking for is rate cuts in May. Markets pricing in only a 37.3% chance that the Fed is going to keep rates where they're at by May. And a lot can happen again between now and then. But in the short term, we could see a pullback in the price of gold and the price of silver. I want to take a look at the chart of gold. And this is a very bullish formation that we've got here on the long-term chart of gold. We've got a cup and handle formation. We've talked about this in several previous videos. But the other side of this is that gold has been trading within this range for the past 4 years or so. If it breaks out above this, you can see it tried to do that Sunday at the end of 2023 there in December. Kind of get that spike up overnight on a Sunday, but didn't really ever get a close above this line here, this part of the handle. The flip side of this is, yes, if we get a break above that, a close above that, I think it's going to be off to the races for gold. But if we get gold coming under some pressure, the next place that there's really huge support for gold is somewhere around $1,600. So, you could see some significant pain in the precious metals, but that's okay. If we see a drop in the price of gold, what do stackers do? You tend to just accumulate more, right? Unless you were planning on selling your metal. And yeah, I know that could be frustrating, but lower prices for stackers is good. Another thing, now look, I don't give financial advice on this channel. If you're heavily invested in the sector, you're worried about a decline, now might be a time to examine protective puts, whether that be on like the GLD or SLV ETF, the GDX, the index of miners. Again, I'm not telling you what to do, just kind of saying if you're really concerned about a potential drop in the price of gold and silver, those are some tactics you might examine to hedge yourself against potential losses there. And I think, now, given what we've heard from Powell, given what we're seeing in the Middle East, now might be a time to examine that. If you're just sitting on some dry powder, you might want to keep it dry and wait, because we could see a drop in the near future. So I think this is something we all need to be worried about, but not worried about, aware of. Worried about is, I'm not worried about the price of gold dropping really, or the price of silver dropping. I more than likely just stack more. I have no intention to sell anytime soon. So drops are actually a welcome event, because in the long term, things are looking good. And if you want to know why I think that, well, just look at this. This is the chart of New York Community Bank Corp, the regional bank that has suffered some significant declines in the past week, given losses on its commercial real estate portfolio. And their price now coming under some significant pressure today, down another 5%. You can see now this regional bank, this is the one actually that took on a lot of the assets of Signature Bank, which was part of the bank failures last year, is now well below its lows from March and April of 2023, when the banks were coming under tremendous pressure. So this regional banking crisis, of course, this bank, its price dropping as Powell says that we're going to have to wait longer for rate cuts, because what do the banks need? The banks need rate cuts to bail them out. They have these huge portfolios of commercial real estate properties, which have declined in value and will continue to do so until rates get cut to draw buyers into the market. You also have these regional banks sitting on large portfolios of U.S. Treasuries with a very low yield, so they've taken these unrealized losses, or they have these unrealized losses. They haven't realized them yet, but should they be forced to liquidate those treasuries, it could cause a cascading problem. Exactly what we saw last March with the regional banks. So, again, long-term fundamentals looking good for the metals, I think. It's almost guaranteed that the Fed is going to be printing a ton of dollars before the end of 2024. That's my take, at least. But anything can happen in the short term, certainly. And from the way things are shaking up, we might see lower prices for gold and silver before we see them higher. And I think that if gold breaks below the $2,000 level, that could be a bad sign. I mean, so far, if we look at the daily chart here for gold, you can see it's done a pretty good job of staying above the $2,000 level for some time here, kind of bouncing off of that every time it approaches it. But if we see it penetrate the $2,000 level, I think that you could see it fall quite a bit further. Again, just an opportunity to stack more, if you ask me. So I'll be checking out SD Bullion, whatever deal they have at the time when it falls. It'll also be interesting to see what happens with premiums if we do get a decline in the price, the spot price of gold and silver. Are premiums going to keep moving up? I mean, the trend has been so far in 2024 for premiums to decline. That means, stackers are actually out there selling. I don't know if a decline in the price of the metals will lead more people to think, well, great, now I can stack at a discount, or if people will get so disgusted and sentiment will get so bad that they might just liquidate their stacks. But if they do, that'll be a good opportunity for the rest of us who are still in the gold and silver game, because we might actually be able to stack some stuff with some metal with a low premium when the spot price drops. That sure would be nice, wouldn't it? Anyway, that's pretty much it for today, everybody. Let me know what you think about these developments in the comments down below. Do you think we're going to see the price of gold and silver come under pressure here in the short term? If it does, what will you do? Let me know in the comments down below. Thanks for watching, everybody. Stay safe and happy stacking, and I will catch you next time.